Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Good morning, welcome to the Forex Daily Video Research. Today we'll talk about the Australian dollar. Well, for those of you guys who didn't watch my video on the EuroFX yesterday, so you can do this on the ForexPeaceArmy.com. Yesterday I posted a video about the euro currency. So the situation on the euro hasn't changed much during the previous day, so my expectation and the trading plan that I talked about yesterday is still valid. But today I decided to talk about the Australian dollar because it has very interesting pattern, and I will give you some advanced analysis on the head and shoulders patterns. Well, how I usually look at this pattern and what we can expect from this pattern. Just one notification for the Australian dollar. The point is that I use the futures contract on Australian dollars that's traded on the Chicago Mercantile Exchange. That's why my quotes will be different from the spot market, from the Forex spot market, but the price action on the futures and on the spot is the same. So you will see the same chart but with the different levels. So I just will show you how to what levels to watch for, and you can do it by yourself on your charts on the spot market. Okay, we will start from the bit larger picture, from the weekly time frame, because it has some important moment from the context on the daily time frame. So look at this pattern, A, B, C pattern. It's here. Market has accomplished 618. Right here. Market has accomplished 618 expansion is around 99.66 in this area around the parity. Okay. Also this recent ABC bottom, market has accomplished 100% expansion around 98.77. About months ago we have talked about this area, about this target, and I said that the nearest target of the Australian dollar is a parity. Now market has shown the nice, excellent example of the Russian rinse pattern right here. Some you can call this as railroad track. Jed Napoli calls it. Well, this is also the known as rejection of price pattern. So the usual target of this pattern is the length of the bars itself. So roughly it will be around 94.70, 95 area, and very close to the previous highs right here. So that's important moment. Keep in mind this area. Will be we need this area on the daily time frame analysis. So this is, as I expect, the minimum target of the possible move to the downside market. Already has passed solid distance from the pattern on the head, railroad track. Now at the same time it has a lot of room for the possible move to the downside to the 95. Okay. Now about the levels of support. First Fibonacci support 9604, just below the market. 382 Fibonacci support from this low to this high. Just below this area, weekly confluence support around 92.76, 93.39. It's 618 from this low to this high, and 382 from this low to this high. This is very strong support. Now let's shift it to the daily time frame. On the daily time frame, we see this nice head and shoulders pattern. But what's the problem with it? Well, in fact, it has no problems, but the one important moment that everybody sees it, and public also see this pattern. It means that this pattern is too obvious to trade in the usual approach to this pattern. So it could be tricky. And what kind of trickiness in this pattern? First of all, well, a couple of words about itself, head and shoulders, what I'm looking for when forming. First of all, I prefer to see that head should be the 1618 expansion from the shoulders, so that has been accomplished. Look at this, from this high to this low. Head is 1618 expansion. The right shoulder is not has accomplished yet, but even from this low to this high, also 1618 right here. But if market will reach the neckline, these stops are almost the same, so this will be very symmetrical. And I prefer to see the symmetry in the time length of the shoulders. So this, we can see that this is double shoulder, so I can't exclude that market can reach the neckline, make some retracement up, and only then break it to the downside. This will be absolutely perfect head and shoulders pattern. But now we will talk about the some trickiness in this pattern. First of all, usually the target of the head and shoulders pattern is the 1618 expansion from the A, B, C pattern. And 1618 expansion right here is around 9207, precisely at the area of weekly confluence support. This is ultimate target of this pattern. But from the other side, we will have Gartley A, B, C, D with the 100% expansion. Also, it coincides with the target of the railroad tracks on the weekly time frame and previous highs. Also, this will be the daily overbought. Now, I think that you understand what the trick is. Where a market will stop, right here or right here, who knows? It's difficult to answer on this question. But the public expects move to the ultimate target around 1618 expansion. And here we can get the Jordan-Napoli head and shoulders failure. I prefer to when the 100% expansion coincides with the daily confluence support. This is much more. It's more better than even when the 100% expansion coincides just with the single Fibonacci support. But we have the daily oversold in this area, so I can't exclude that market can reach this area and then market returns back above the neckline. That's why I prefer to enter in the head and shoulders pattern during this sell-off, on the retracement from this sell-off. When the market shows some retracement, enter on the short side, market will reach the neckline, move your stops to break even, and just watch how market will respond with this area and with the 100% expansion. If market will returns back, so you can fix some profit. If not, well, you will get the very attractive, the amazing risk-reward ratio. So this is kind of trickiness in always in the head and shoulders pattern, because we have the head and shoulders from the one side, ABC 1618 expansion, the usual target, or also we have the ABCD, Gartley ABCD buy, and very often it leads to the head and shoulders failure. Okay, so that's been said, there were interesting pattern on the weekly and daily time frame, and it still can be used for the possible enter on the short side of the market, but I suppose that we should wait some retracement to the upside. Also, I've talked to you about how I look at the head and shoulders, what I'm expecting to see from this pattern, and the trickiness of this pattern. Be aware if you will take the signal of this area of support. 100% expansion from this ABCD move. This is also the previous highs and the target of the railroad track on the weekly time frame. Also, this is daily oversold. But usually the target of the head and shoulders pattern is 1618 expansion from AB move from the head and retracement to the shoulder. ABC 1618 expansion. This is also strong area of weekly confluence support.